Hello everyone, and hope you guys are doing great. In my today's video, I'm going to discuss with you about Yatharth Hospital Limited. We're going to just go through their, recent Q4 FY26 result and the full year numbers, and we'll also go through the main points from the Concall summary to understand what the management has said and what are the things that we need to concentrate on. And before we get into that, right, so I'll just give you a brief what the company does, right? Obviously, with the name also, you would already understand that they are into the business of hospitals. So they are mainly based out of the region in Gurgaon, Noida, the NCR region, mostly in the north side. They have some hospitals in outside of Noida, like in Agra and in Jhansi. This is where they mainly operate at. Okay, and they are mainly into super specialty. They are not just how to serve the normal patients, but they are into super specialty also, from oncology, from neurology, in all those areas, which is a specialty for them. And if you look at the recent result, right, the YOY revenue increased by almost 47% to 341 crores, and PAT was up by only 15% to 45 crores. So we'll get into that, why the margin was depressed and why they did not get the operating leverage. And if you look from the full year of FY26, the revenue increased by almost 36% to 1,207 crores, and PAT was up by almost 30% to 170 crores. So over here, if you see, the PAT number is, the PAT increased almost close to the revenue, but the margins were still slightly depressed. And if you look from the margins perspective, especially for the Q4, if you look at it, the EBITDA margin came down from 25% to 23.4%. PAT margin came down from 16.6% to 13.1%. And if you look for the whole year, right, it came down from 25% slightly to 24.2%, and PAT margin overall came down from 14.7% slightly to 14.1%. So what was the main reason for this, slight margin depression, and what led to it, right? So you need to understand, right? Yatharth Hospital is increasing the number of beds, and they are mainly doing it through acquisition, right? So they have to acquire new hospitals, and the back of it, right? Even though the hospitals are new, you have to start, how to say, as per the rules, right? You have to start providing for depreciation and amortization, due to which, right, if in the terms of accounting, the profit is, the margins are slightly depressed. But as these hospitals scale up, right, and, ramping up and start contributing to the revenue in a meaningful way, this margin will come back to normal. So that should not be a problem. So whenever we are looking at margin depression, right, we should look what is the reason for margin depression. Is it because the company is are losing their market share? They do not have the pricing power. Then it's a problem, and we should be careful of that company. But in case if a company is investing in their growth, right, and at the back of it they have a slight margin depression temporarily, then it's okay, because we are looking at the future, what the company is doing. Right? So that's the case in case of Yatharth. And if let's look at the main statistics for Yatharth, which are very important, right? If we look in the terms, and these statistics I'm going to take for the whole year of FY26, because we have got the full year result, which is very important. If you look at the occupancy rate, is at increased to 68%, which is up 7% YOY. The average revenue of per occupied bed has increased to 33,124 rupees, which is up 7% YOY. And in terms of average length of stay, right, it has increased to 4.16 days. And if you look at the IPD and OPD volume, right, it increased by 15%. But if you look in terms of the revenue contribution to the overall, right, that's quite interesting if you look at the numbers. See, the IPD volume overall, if you look at a number of patients, is only 17%, and OPD is close to around 83% of the overall volume. But if you look in terms of the revenue contribution, right, IPD volume, inpatient volume contributed around 89% of the revenue, and outpatient volume contributed to only 11% of the revenue. So this clearly shows that for them, the inpatient are more valuable in terms of the revenue compared to the outpatient. So, and that's where they are concentrating on in order to increase the overall revenue. And if you look at their pre-tax operating cash flow, it has increased by 82% to 286 crore, which is quite a good sign. And if you look in terms of the cash conversion, it has improved to 98% from 78% last year. And if you look at the bed capacity at this point of time, it is around 2,000 800. And if we look at the other thing, which is very important, right? So in hospitals, right, whenever any patient comes, right, so they make a payment either via insurance, either via cash, or either if they might have some government insurance, right? So if you look at the payer mix of Yatharth Hospital, so around the government side contribute to around 35%, and cash and TPA, which is third party insurance, contributes to about 65%. And what the management is saying, right, they want to reduce the overall contribution from the government side from 35 to 25% and increase the cash and TPA side. The main reason is because from the government side, the payment comes quite late and it is a drag on the working capital. So if they are able to reduce it, the working capital will definitely increase into better. So let's look into what are they doing in terms of expansion and growing, right? See, for a hospital, which is listed, obviously, the way the shareholders would look at it, how they're increasing their revenue. And the only way, a hospital can increase their revenue by opening more number of hospital, increasing the number of beds, right? So if you look from that perspective, so the management is giving a guidance that they want to increase their bed capacity to 5,000 from the current 2,800, which they have in the next 3 years. So the Noida extension and the Noida extension, the Greater Noida and the Gurgaon hospital are upcoming, which is increase the bed capacity to 3,200 bed. And what the management is saying, right, out of this overall expansion, 70% of the expansion will come through acquisition and 30% is through greenfield. So which simply means that they're going to do inorganic growth. So they just have to pay the money, get the hospital, integrate within themselves, and start ramping it up. And in terms of the greenfield, they're going to open completely a new hospitals on their own. And if you look at the growth what they have done recently, right? So if we, they so recently what they did, right, they acquired an under construction 250-bed hospital in Gurgaon. It's a super specialty hospital. And the another important thing is, right, this hospital is based within a dense and high income catchment area. And the capex that the management put right now to to buy the hospital was around 100 crores. And management is saying 100 crore will be further employed, to get the hospital up and running. And the average revenue per occupied bed is going to be 50K plus. So that is quite a great sign, because if you look at the overall average revenue per occupied bed is only around 33K. But over from this hospital, they see a potential of average revenue per occupied bed is going to be around 55K plus. And they're saying that the operations for this hospital will start mostly by April of 2027. And the other thing what they're doing is, right, they're ramping up their New Delhi hospital, which is around 300 bed, and Faridabad hospital, which is around 400 beds. So as of this, FY26, they contributed to only around 11% of the revenue. But we need to understand that the Faridabad hospital only started contributing from September onwards, and the Delhi hospital contributed, I think it was June or July 2025. And over here, the other good thing is, right, so this two hospital does not have any government share at all. So that means every the money, the revenue that comes in is either via cash or third party insurance. And the other thing what they're doing is ramping up the Agra hospital. So they bought this Agra hospital last year, and they integrated it, and it's in within their own structure from Feb 2026. So they are also ramping this up. So if you look at this year, right, these new hospitals which will start contributing to the overall revenue. So overall, if we see, right, the management is taking all the right steps in order to grow. And in terms of the revenue guidance, also management was very confident. They said that this year in FY26 they did a revenue growth of around 36%. They said they will even do better than that. Obviously, they did not give any specific number, but easily, if they can do better, that means easily it's going to be around between 40 to 50%. And they said even though they are acquiring businesses, right, and will go to acquisitions in the future, they'll still be able to maintain the EBITDA margin to around 24 to 25%. So if you look at the overall business, they are doing all the right things in terms of growth, in terms of acquisition, and revenue growth. And even though they are spending so much money on acquisition, they are not letting it drag their overall profitability at all. So let's see how well Yatharth Hospital is going to do in FY27. I'll definitely keep an eye and keep you guys posted. And if you like this analysis, please do hit like and subscribe to my channel. Thank you and God bless you.